Hi, I'm Martin Smith, and I'm talking about stock markets again. Types of investing. Let's see here. We've got crash investing. This is the first thing I saw when I saw investing is that when I was in computers back in 1984, I was looking to create bots and just pay attention to market and make programs to figure out which way the stock market's going and do quick buys and sells. And that just pretty much fizzled out. My eyes went bad, had to change majors. That turned out to be a good thing because after that, the computer science field all went to India. Anyhow, going back to crash investing, that's I started looking at some stock market charts, and back in 2008, everyone was all gung-ho, throwing everything they had in the stock market, and it peaked, and that's when you want to sell. So my idea was to wait for it to bottom out. When you get to the point where you go around and you listen to people talking about the stock market, and the only thing you hear is the woes of how much they lost and how they wish they never got into it again, that would be the time to be buying stocks. So what I was looking at was to buy a bunch of stocks after the crash. That's, I'm guessing it's 8 months from now, probably February, March area. So after it usually comes up, peaks. This is where all the shorts short out the stock, so it drops. This is where the Fed raises the interest rate, and then it troughs out, peaks up again. This is where some of the shorts chicken out and start buying stocks back to pay off their short positions, and they cash out, and then you have another drop. And I think from where we are now, you can pretty much see the start date of this video. I think we're going to go down another 50 to 80%. Time will tell. I'll look back on this and probably laugh about it, say either, wow, I hit it on the head, or I was way off. One of the two is going to happen. So if it doesn't happen, my money's still in the bank. It's not a problem. It's where I've always had it. It is a problem now because the interest rates are so high. It's unbelievable. So the crash investments, looking at the very peaks of the stock market, and then looking at when we have this huge recession, and they call it a bear market, where it switchovers. They call it a bull market, and then it switchovers to a bear, and it goes down, and then after it picks back up a little bit, they'll start calling it a bear market again. And that's why I was calling it a crash market. There's probably another name for it that I don't know about. Value investing, that is the Charlie Munger way, and anything you can read up on Charlie Munger, you should do it. I would not follow him, buy the stocks that he buys. I wouldn't advise that at all. He has his own way of making money off of people that do that. There's day trading, where you go in and out of stocks real quick. There's limit trading. This is something that I've been doing. I've been limit buying Tesla, and it's where you try and get the very dips. So you watch the stock market go up and down, and you'll see waves, and these waves are either on the decline or they're on an upswing. If on a decline, what I'm looking at is, say, okay, where are the breaking points? And I try and figure out in my mind where the breaking points are, and I'll put in a limit trade. And sometimes I don't get those limit trades for weeks or months. I've got one in there that I started at 601, I've brought it up to 626, and now I've got it at 655. That's the last one I have in for Tesla. And I may get it, I may not. Right now Tesla is dipping upwards, and we're getting close to a split, so I may never see that. If they start calling splits, I need to take that limit order out real fast. I'm not sure if it would buy a split at that price, and oh, that would be expensive. I'd be paying 3 times what I intended to pay for a stock. So that would be the limit orders. Then you've got the growth investment. That would be, you're looking for growth companies. A lot of people are usually look into when growth companies are starting up, and they'll study the companies and they'll try and figure out which one has the best management, which one has the best finances. Do they have a moat around them? That's one of the big catchphrases of the stock market is, does it have a moat? This is where you're asking, do they have any competition? Do they have a monopoly on their little sphere of business? And if you're wanting to invest in a company, a monopoly is a good thing. As far as being a good company for the society that it is within, monopolies are bad things. But anyhow, these are all the things they're doing. One of the reasons why I'm not afraid of investing in Tesla is because, from what I hear, it is the fastest growing company in the history of the stock market. So you can ignore that the leader of it, Elon Musk, is half off his rocker. Crazy as a fox would probably be a better way to put it. And you can ignore the PE ratio being 600 just a few years ago. I bought in when it was 200. Most people would look at a PE ratio of 40 and say, holy smoke, stay away from that stock. Just don't even come close to it. However, the speed of the growth of Tesla, I think, might actually break the stock market. It has come down, but I think it will go back up to where it was or exceed it by the time the crash is at its bottom. And the reason why I think that is because one of the stories I heard of in Ireland, where people were going through the potato famine, they were starving. They had to scrunch and scrounge everything they had, and even trade. They would go out and trade to buy fish nets. They would take the last money they had to buy food. And this is pretty much what's happening in our society right now. A car is a fish net. Without a car, we can't work. Without work, we don't eat. And this is getting away from gasoline. It's getting away from one of the major problems that's sucking our economy dry right now is the price of gasoline. So yes, I think that this particular business model will thrive and even get bigger the harder we go into a crash. So yeah, I do think Tesla will beat the stock market. It's the only company that I'm betting on, and from this point on, I'm not really planning on putting any more money into it. The other one I'm looking at in a couple months from now, I'm not gonna wait for the stock to bottom out. I'm gonna go down another 30%. Like I say, I think it'll go 60 to 80% down. So I'm looking at halfway to the bottom at a guess, and then I'm going to start slowly buying Intel. And no, I'm not afraid of telling people my plan and have everybody undercut me, because my videos are not that popular, and people that are in stock market don't watch my videos. So those are my plans in the stock market, and I'll see you on the next video.